We are going to study fixed income module 1. So this is module 1, fixed income instrument features. Fixed income instruments such as loan and bonds are most common means of financing. Fixed income issuers include business, governments, and not-for-profits that promises to pay interest and repay borrowed principal to the investors. They are commonly used between individual or company and a bank. Bonds is more standardized fixed income instrument designed to be more easily tradable than loans and are commonly issued by large companies, governments, and special purpose issuers. They are core holding for many investors, including mutual funds, pension plans, insurance companies, and central banks. So, what is the overview? Fixed income instruments are debt instruments such as loan and bonds that represent a contractual agreement under which issuer borrows money from investors in exchange of interest and future repayment of principal. Key feature of fixed income instruments include issuer, borrower, time to maturity, principal amount, coupon range, frequency, seniority, and contingency provisions. These features in turn define the cash flow structure of the instrument. A fixed income investor receives a return or yield based on periodic cash flows based on bond issuer and change in price of the bond. A bond's price and yield वेरी इन्वर्सली विथ ईच अदर बॉन्ड्स का प्राइस और यील्ड इन्वर्सली वेरी करता है बॉन्ड का प्राइस और यील्ड इन्वर्सली वेरी करता है उसका मतलब हायर द बॉन्ड प्राइस लोअर इज द यील्ड हायर इज द यील्ड लोअर इज द बॉन्ड प्राइस fixed income investors are exposed to credit risk, the risk of loss resulting from issuers failing to make full and timely payment of interest and or principal repayment. Investors expect to earn lowest yield on bonds that carry little or no credit risk and higher yields on lower credit quality investment instruments. A fixed income instrument's credit quality is affected by underlying source of repayment, its seniority, credit provision such as collateral backing, and the investor's willingness to pay. अगर विजय माल्या है जिसका विलिंगनेस टू पे नहीं है तो उसको मैं क्या ही कोई क्रेडिट क्वालिटी दूं. The legal contract describing the features and other terms of fixed income security is known as indenture. Uh, Indentures often contain covenants or legally enforceable terms agreed to at the time of issuance. This may either require the bond issuer to take an action or prohibit the issuer from performing such actions. So let's see the questions. The annual coupon amount for a fixed rate bond is calculated by annual coupon amount for each. Let's understand that all the terms first and then let's go to the questions. Now, what are the features of the fixed income securities? Fixed income instruments are debt instruments such as loan and bonds. Loan are debt instruments formed and governed by private agreement, usually between individual and company, and the financial intermediaries such as bank, bonds, and fixed income securities are more standardized contractual between larger issuers and the investors. While corporate issuers tend to have at most one or two type of equity securities outstanding, they often have many other type of debt obligations outstanding, each with distinct features such as time to maturity, seniority, and currency. Which liabilities are fixed income instruments? Earlier module in corporate issuers and financial statement analysis issue discussed the balance sheet of corporate issuers composed of assets and liability and equity that finance them. Liabilities are broadly defined by accounting standard as present obligation to transfer economic resources as a result of past event. Present obligation to transfer the economic resources as a result of the past event. This definition encompasses many types of obligations, including amount that the issuer owes to supplier, customers, employees, government, retirees, lessors, and so on. Not all liabilities are fixed income instruments, but all fixed income instruments are liabilities. So there is short-term assets, long-term assets, which could either be financed by the short-term liabilities, long-term liabilities, and equity. Uh, this all could include your accounts payable obligation to the suppliers, accrued payroll, deferred revenue, which is your obligation to your customers, your taxes payable, which is the obligation to the government, lease liability to the lessors, pension liability to the retirees, loans to the banks, bonds to the investors. And whenever we speak of the loans, which is to the banks or the bonds to the investors, these are considered as fixed income instruments. So let's say if there is a corporation with the bond cash flows times zero, semi-annual, and maturity time is equals to T. Uh, Principal par value paid to issuer, periodic fixed coupon payment plus return of principal. At issuance, investor purchased bond in exchange of cash equal to the bond principal or the amount borrowed, which is also referred to as the bond's par value. On each interest payment date, it commits to pay bond investor an interest or a coupon payment equal to the coupon rate times the par value of the bond for periods shorter than a year. Annual coupon amount is divided into smaller equal periodic payments. On the bond's maturity date, it pays a final fixed coupon and a principal amount to the investor. So there is a settlement date, there will be a maturity date, principal amount, interest, its periodic fixed or variable cash flows paid to the investors. Uh, its seniority, it means that ranking among all issuers obligation. The bond interest can be paid as fixed coupon paid on specified days, uh, variable coupon determined and paid on specified dates, or part or single payment with a principal at maturity. बॉन्ड्स विथ वेरिएबल इंटरेस्ट पेमेंट, अगर आपका इंटरेस्ट पेमेंट जो होता है वो वेरिएबल होता है, वो होता है floating rate notes FRN, and FRN coupon is determined as a combination of a market reference rate and the issuer specified spread, which is your credit spread. So you will have a market reference rate plus credit spread. It is a standard borrowing or lending rate for issuer with the highest credit worthiness or the lowest default risk for different currencies and maturities. MRRs were historically determined by pool of lenders, which is LIBOR, but transitioned to an average or observed market transaction rates. The credit spread is set at the time of FRN issuance, is usually constant over the bond's life and is expressed in the basis point, which is your BPS or the hundredth of the percentage point. दी हायर एंड इश्यूअर्स क्रेडिट क्वालिटी, अगर इश्यूअर का क्रेडिट क्वालिटी ज्यादा है तो स्प्रेड लोअर होगा, और इन कॉन्ट्रास्ट एमआरआर resets periodically throughout the bond life cycle based on market factors. As MRR changes, the FRN coupon rate and the interest payment changes accordingly. तो आपका स्प्रेड फिक्स है, आपका एमआरआर चेंज होता रहेगा, एंड बिकॉज ऑफ दैट योर एफआरएन विच इज योर फ्लोटिंग रेट नोट्स का इंटरेस्ट विल ऑल्सो चेंज. Bonds that do not pay periodic interest and instead pay interest as part of a single payment with principal at maturity are called as zero coupon bond or pure discount bond. मतलब 1000 का बॉन्ड है जो आपको 800 पे इश्यू किया है, जो 200 का है वो इंटरेस्ट है और ये 200 का इंटरेस्ट आपको मैच्योरिटी पे मिलेगा, तो दिस इज कॉल्ड एज योर जीरो कूपन बॉन्ड और प्योर डिस्काउंट बॉन्ड. It is issued at discount to par. The difference between your issuance price and the par value represents a cumulative interest payment at maturity. Now, what is seniority? A debt that issues seniority or priority of repayment among all the issuer obligation is an important determinant of risk. Senior debt has priority over debt claim in case of bankruptcy or liquidation. Junior debt or subordinate debt claims have a lower priority than seniority debt and are paid only once senior claims are satisfied. ओके, तो जूनियर डेट होता है या तो सबॉर्डिनेट डेट होता है, उसकी लोअर प्रायोरिटी होता है. इन लहमान ब्रदर्स केस, लेमन देयर वाज अ सबॉर्डिनेट सबप्राइम डेट क्राइसिस, so which was also pertaining to the subordinated debt. Contingency provision. A contingency provision is a clause in a legal agreement that allows for an action if an event or circumstances occurs. The most common contingency provision for bonds involves embedded option, specifically call, put, and conversion to equity option. So there are also a contingency options in the bond which will have call, put, and conversion to equity option. This resemble option contract but cannot be traded separately from the bond itself. However, the value of this embedded option may be established by comparing the value of bond with the contingency provision that of an otherwise similar standard bond from the same issuer. We can use the features of the bond issue to model the cash flows. It illustrates the cash flow over the life of the 5 years fixed coupon corporate bond described earlier. So let's see the features. So at the outset, investor will give him $300 for the period for every 6 months. He will receive 4.8 million dollars worth of rupees, and in the last year he will first receive 4.8 million interest and he will get the repayment of 4300. So this is the life cycle of that particular bond. Now we have to calculate yield measure. Now what is the yield measure? Given a bond's expected cash flow and its price, return or yield measures can be calculated. One simple measure is the current yield equals to the bond annual coupon divided by bond's price and expressed as a percentage. For example, if a 5 years bond were traded at a price of 101 per USD 1000 in face value at the time T, its current yield, मतलब at any particular point in time, bond का current yield क्या होगा? It will be annual coupon T divided by bond price. कितना amount of coupon देना है? If it is 3.2% divided by 1.101, it is 3.2% divided by 101, which is equals to 3.168%. This is your yield. उसका मतलब yield at a particular point in time, current yield YT is equals to annual coupon T divided by bond price. The current yield is analogous to dividend yield for equity shares. अगर मेरे को इसको इक्विटी के साथ कंपेयर करना होगा तो इक्विटी में कौन सा पैरामीटर है? तो फिर आपका डिविडेंड यील्ड पैरामीटर है कि कंपनी कितना डिविडेंड दे रही है. डिविडेंड डिवाइडेड बाय शेयर मार्केट प्राइस. So that will be your equity instrument alike thing for this. A more complex but far more common yield measure is yield to maturity. This is only your current yield, right? अभी के अभी yield कितना मिल रहा है, बट लंबे समय तक अगर देखेंगे तो इसको देख सकते हैं yield to maturity कितना मिल रहा है, which is also called as your internal rate of return, which is your IRR, calculated using bonds price and its expected cash flow to maturity. YTM is usually quoted as an annual rate. YTM को कैसे गिना जाता है? एनुअल रेट पे गिना जाता है. उसका मतलब अगर कंपनी सेमी एनुअल इंटरेस्ट भी दे रहा है, फिर भी मैं उसको एनुअल रेट पे कैलकुलेट करूंगा. An investor's rate of return on a bond will equal to the bond's YTM at the time of purchase, as long as the investor receives, one second, all the promised interest and principal payment as scheduled, holds the bond until maturity, and reinvest all the periodic cash flows at YTM. Notice that these are the same IRR assumption discussed in the earlier modules. If any of these assumptions do not hold, the investor's rate of return on bond investment will differ for YTM. If the 5 years bond were trading at a price of 101 per 1000 face value immediately after issuance, its YTM is the rate R in the following equation. Recall that 3.2 interest is paid semi-annually. उसका मतलब 3.2 if it is paid semi-annually, or 1.6 in each of the 10 period per 100 in face value. तो आपका जो 101 आपकी जो वैल्यू है आज के टाइम पे, जो आपकी कंपनी की प्राइस 101 है, इज इक्वल्स टू 1.6 डिवाइडेड बाय 1 प्लस आर प्लस 1.6 डिवाइडेड बाय 1 प्लस आर टू प्लस 101.6 डिवाइडेड बाय 1 प्लस आर 10, जब तक अपने को पैसा मिलने वाला है वो. तो उसका मैं अगर प्रेजेंट वैल्यू निकालूंगा, देन आर इज इक्वल्स टू 1.49% ऑन सेमी एनुअल बेसिस, or 1.49 into 2 is equals to 2.98% annualized rate. The YTM calculation is covered in depth in the later module. So let's see this thing in detail in the later module as to what is the way in which you calculate your YTM, which is also your IRR. So we saw what is current yield. We saw in principle what is your yield to maturity. Now let us see what is yield curve. Most fixed income issuers have many debt instrument outstanding. एक issuer के पास बहुत से debt instruments होंगे जो outstanding है. A usual way of evaluating the YTM on one issue is to graph all an issuer's debt instrument with identical features by their YTM and times to maturity. ठीक है, अलग अलग डेट इंस्ट्रूमेंट को आप टाइम टू मैच्योरिटी पे प्लग इन करो और उसके YTM पे प्लग करो. दिस ग्राफिकल डिपिक्शन रिजल्ट्स इन यील्ड कर्व. सो एंटिटी हैज 6 आउटस्टैंडिंग इश्यूएंस. द 3.2% 5-year bond is the third point from the left. So what is that? Let's see down. तो आप मैच्योरिटी पे डालो कितना टाइम मैच्योरिटी बाकी है, और उसके बाद आप डाल दो कि YTM कितना कितना आ रहा है. इन दिस एग्जाम्पल द बॉन्ड विथ लॉन्गर मैच्योरिटीज have higher YTM, indicating that investors are demanding higher expected return to compensate for higher risk associated with the longer maturity bonds of the same issuer. A way to measure credit risk, one type of investment risk of fixed income securities for a bond, is to compare issuer's yield curve to that of the comparable sovereign bonds, which has little or no credit risk. Exhibit 5 shows the yield curve of BRWA bond versus the yield curve of the sovereign bond. So आप अगर YTM कैलकुलेट करोगे, YTM अगर आप ग्राफिकल पॉइंट में डालोगे फॉर 5 years for BRWA corporation, it will be higher than for the government corporation. Even for a government corporation, you will seek a higher YTM if your period of maturity is higher. But your YTM for private organization will always be higher than your YTM for the government issuer. Why? This will be because of your debt spread or your credit spread and because of the risk which is associated to the private organization. Yeah, for the credit risk associated with the BRWA bonds. A fixed income security features outlined in the prior lessons are included in legal contract that describes the form of the bond. This is fine. The sources of bond repayment vary among issuers and are a key factor in determining the bond's relative risk. National government have a sovereign right to tax economic activity and in some case print currency, which results in their bond often holding highest credit quality in given region. The sovereign bonds in developed markets are often considered to have no default risk and are used as a benchmark for relative bond market risk. Okay. Local or regional governments may either use their taxing authority as a source of bond repayment or consider fees from infrastructure projects such as bridge, toll roads, public transit system to repay interest and principal as an associated bond issue. Investors in corporate bonds usually rely on operating cash flows of the firm as their primary source of interest and principal repayment. तो अगर आपने कभी किसी कंपनी को पैसा दिया है, आपको क्या चाहिए कि कंपनी अब जो ऑपरेशंस करती है उससे ही आपका पैसा रिपे करे कि कंपनी दूसरा कोई लोन लेके आपका पैसा रिपे करे? ऑपरेशन से उसका मतलब you have to rely on the operating cash flow of the company to see whether they will be able to give your interest and principal repayment. As shown in the later lessons, investors use such factors as profitability and leveraging to gauge the expected variability of corporate cash flows available to service debt. Corporate bonds for issuers of higher credit quality are usually unsecured. Corporate bonds for issuers of higher credit quality are usually unsecured, which means these cash flows are sole source of repayment. And in the earlier BRWA example, corporate issuers with less stable operating cash flows usually face more credit provisions and restrictions and may offer investors a legal claim, lien, or pledge on specific assets as a secondary source of debt repayment in which they are referred to as a secured bond. तो आपको जब लगता है कि कंपनी इज नॉट गोइंग टू हैव ऑपरेटिंग कैश फ्लो, then you can consider lien or a pledge option, or you would want that company secures its assets against your bond. In liquidation, secured debt holders may receive the value of designated assets, while unsecured debt holder would only receive any funds remaining after their allocation. तो जो अनसिक्योर्ड है वो कौन है? जूनियर डेट होल्डर. और जो सिक्योर्ड है वो कौन है? सीनियर डेट होल्डर. A junior unsecured bond holder would be last creditor in the chain to receive asset value. Uh, the investors evaluate operating cash flow as well as secondary claim, referred to as collateral, when assessing an issuer's credit quality, which may include physical assets, cash flow, such as licensing fees, financial guarantee from third parties. Issuers must weigh the benefit of providing this credit enhancements, lower borrowing cost, with the cost in terms of reduced operational flexibility. Perfect. Sovereign bonds and corporate bonds source of repayment. The tax revenue is for sovereign bonds and therefore for the bond investors. Operating cash flows for unsecured corporate bond. and therefore for the bond investors, operating cash flows as well as collateral for secured bond investors and therefore the bond investors. The source of repayment for asset-backed securities are the cash flows from the group of loan or receivable owned by the special purpose issuers. A later module will show in detail how ABS transaction recreates an entire capital structure of asset-backed cash flow claims over investors class with different priority claims to this cash flows. Okay. These different classes shown in exhibit are referred to as tranches. Okay. So if there is an asset backed security, there is loan या तो receivable cash flows, there is asset backed security, there is a tranche A bond holders, tranche B bond investor, and tranche C bond investor. Tranche A might have high priority to claim cash flows, followed by tranche B, and then followed by tranche C. Uh, Bondholders have limited influence over the issuer as compared to equity holders who have voting rights. One exception to this is legally enforceable rule or bond covenants that borrowers and lenders agree at the time of issuance. Affirmative covenants specify that issuers are required to do, whereas negative covenant specify what issuers are prohibited from doing. Affirmative covenants are typically administrative in nature. Common include the use of proceeds from the bond issuance, the provisions of timely financial report permitting bondholders to redeem their bond at premium or par if the issuer is acquired. Other affirmative covenant examples include pari passu clause or equal footing clause, which ensures that a debt obligation is treated the same as borrower's other debt obligation with similar seniority. A cross default clause specifies that borrowers are considered in default uh, if they default on another debt obligation. This covenant typically neither imposes additional cost on the issuer nor materially restrains the issuer's discretion in operating the business. Perfect. So we saw what is the asset-backed security. Uh, the type of bond issued by legal entity called a special purpose entity solely to own assets such as loan, receivable, and mortgages, and to distribute cash flows to the ABS investors. They are known as mortgage-backed securities, while ABS refer to non-mortgage ABS. So that could be either mortgage-based ABS or non-mortgage-based ABS. Bond in real terms is a contractual agreement between the issuer and the bond holders. Capital market fixed income securities with original maturities greater than 1 year are capital market securities. Assets of financial guarantee underlying a debt obligation is the collateral clause in the legal agreement that allows for some action if specific event or circumstances is the contingency provision. Coupon is the periodic interest payment paid by the bond issuer to investors. It is expressed in terms of percentage of par on an annual basis generally. Your spread, your cross default clause is the covenant or a contract clause that specifies borrowers are considered in default if they default on another debt obligation. अगर दूसरे का भी अगर debt obligation नहीं भरा तो मेरे को आपको गिना जाएगा कि आपने मेरे को भी default किया है. Current yield is the sum of the coupon payments received over the year divided by flat price. This is called income interest yield or running yield. Current yield और ये किसके जैसा था? ये आपका dividend yield ratio के जैसा ही था. Embedded options, contingency provisions found in the bonds representing rights that enable the holders to take advantage of the interest rate movements. They can be exercised by the issuer, by the bondholder, or automatically depending on the course of the interest rate. And your fixed income instruments are your debt instruments such as loan or bonds. Fixed income securities, ऊपर का क्या था, instruments are loans or bonds, securities designed to be more easily tradable than a loan such as bond. इंस्ट्रूमेंट हो सकता है आपका लोन और बॉन्ड, बट सिक्योरिटी वो है जिसको ट्रेडेबल कर सकते हैं, विच इज मोर ऑफ बॉन्ड. Floating rate notes, notes on which interest payment are not fixed but instead vary from period to period depending on the current level of reference interest rate. They are also known as floaters. जूनियर डेट को लो प्रायोरिटी होती है, सीनियर डेट को हायर प्रायोरिटी होती है. मार्केट रेफरेंस रेट कौन से है? The interest rate underlying used in interest rate swap. The interest rate underlying used in interest rate swap. These rates typically match those of loans or other short-term obligations. Survey-based LIBOR rates used as reference rate in the past years have been replaced by the rates based on daily average of observed market transaction rate. पहले था survey-based LIBOR rates, which was used, that has now been replaced by the rates based on daily average. किसका है daily average? किसका? Of observed market transaction rates. तो मार्केट में आप जिस तरीके से ट्रांजेक्शन रेट्स देख रहे हो, उसका आप जो डेली एवरेज करते हो वो है. एग्जाम्पल, सिक्योर्ड ओवरनाइट फाइनेंसिंग रेट SOFR is an overnight cash borrowing rate collateralized by US treasuries. So SOFR is used in uh, US treasuries. The other MRRs, which is your market reference rate, include Euro short term rate, ESTR, and SONIA, Sterling Overnight Index Average. Maturity, it is the date when there is a final payment to the investors. Money market securities, fixed income securities with original maturities of 1 year or less. तो फिक्स्ड इनकम सिक्योरिटीज विद ओरिजिनल मैच्योरिटीज ऑफ 1 year और लेस, वो उसको आप क्या बोलोगे? मनी मार्केट सिक्योरिटीज. तो मनी मार्केट विल बी सिक्योरिटीज, फिक्स्ड इनकम सिक्योरिटीज विथ मैच्योरिटीज ऑफ लेस देन 1 year. जो बॉन्ड की कोई वैल्यू अपरंपार होता है उसको क्या बोलोगे आप? परपेचुअल बॉन्ड. सबॉर्डिनेट डेट क्या होती है? अ क्लेम ऑफ अनसिक्योर्ड डेट दैट रैंक्स बिलो फर्म्स सीनियर अनसिक्योर्ड ऑब्लिगेशन. टेनोर क्या होता है? रिमेनिंग टाइम टू मैच्योरिटी फॉर अ फिक्स्ड इनकम इंस्ट्रूमेंट. डिफरेंट टाइप ऑफ जो भी इन्वेस्टर्स होते हैं उसको ट्रेंचेस बोलते हैं. Yield curve, a graphical depiction of yield to maturity of bond from the same issuer across maturities. उसकी जो मैच्योरिटी के अंदर अलग अलग जो उसके YTM जनरेट हो रहे हैं, ये जो YTM है उसको आप yield curve में डालोगे. Yield to maturity क्या है? It is similar to IRR on the fixed income instrument, assuming all cash flows are received on the scheduled date. Then zero coupon bonds that do not pay interest during their lifetime. They are issued at discount to par value and redeemed at par, also called as pure discount bond.